Good afternoon, and thank you for joining us today. My name is Timothy Lee, and I'm a research analyst at Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on nickel exploration and development today. We will hear from Mark Selby, President and CEO of Canada Nickel Company. During today's webinar, he will provide an overview and outlook, and then we will take questions. You can type your questions into the chat box at any time, and we will get to as many as we can. Before we kick things off, first we need to discuss some fine print. During this Canada Nickel Company webinar, forward-looking statements may be made. I would direct listeners to the company's forward-looking statements disclosure outlined on page 2 of the corporate presentation that can be found on the company's website, canadanickel.com. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or a recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors, and participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures pertaining to Canada Nickel Company. So we have Canada Nickel presenting today. The company has a portfolio of projects in the Timmins mining camp. This includes its flagship Crawford project, where the company has completed a feasibility study, as well as the past producing Texmont mine, which the company has on a development fast track. And it also has a pipeline of other projects with geophysical characteristics and initial drilling results similar to Crawford. The company has also brought in some major strategic investors, which Mark will no doubt tell us more about. With that, I now turn it over to Mark to update our audience on the company.
Thanks, Timothy. We've got the slide presentation up here. Yes, I will be making forward-looking statements during the presentation. Again, we started the year with a big bang with back-to-back strategic investment announcements coming off the back of our feasibility study released at the end of November. So it caps off another outstanding year for our team. I'm lucky to work with a great group of people who've been able to, again, push this project forward from our 5th drill hole in September 2019 and just over 4 years to a project that's completed a feasibility study, is more than halfway through a permitting process and on track for a construction decision in the middle of next year, and hopefully be one of the only new large-scale nickel sulfide operations globally by the end of 2027. In terms of if you've read the headlines recently on the nickel market and some of the troubles that have been befalling some of the nickel operations in Australia, you'd wonder why anyone was putting money into the sector. It's really important to differentiate between the short-term bumps that we're going through right now and what the longer-term picture is, particularly for nickel supply and demand in North America. And I'll talk about that in detail in a few more slides. In terms of the investors who came to the table, very happy to have now 3 cornerstone investors. So just over a year ago, we had Anglo American come into the story for a 9.9% investment. Their primary focus is they've got a suite of future suite technologies that they think can unlock additional value from these ultramafic deposits. And so given the fact that we're the most advanced ultramafic and have potential of an entire district with multiple properties in there, we were a logical choice for them to partner with and check out the potential of these technologies. Agnico Eagle, we're very happy to have them come in and provide the backstop for what was a $35 million charity flow-through funding. That exploration money needs to be spent this year because we closed it before the end of 2023 to get the additional premium that was available in 2023. This will really allow us to unlock, the huge potential that we see across our Timmins Nickel District. With the success that we've had with Crawford, we really believe that we are in the midst of unlocking, what could become the world's largest nickel sulfide district, and the $35 million of funding that we got from Agnico Eagle, will allow us to push this very, very aggressively. And then the last person that we announced to the table here is Samsung SDI. They're one of the world's largest battery producers. And again, as investors, it's really important to see that we've got, an Asian battery player coming into the story. Again, the big headline risk is always Indonesia. And, if Indonesia is going to, supply the world with all the nickel the world needs, why on earth would one of the battery companies in Asia come to North America for supply? One of the other leading ultra-mafics, FPS Nickel, it's got an investment from Sumitomo Metal Mining. So we've got two of the largest and leading battery and mining companies in Asia coming to Canada for these big bulk tonnage ultra-mafic deposits. So if you haven't become an investor, I would look to see where the smart money is going. And, we've both been very fortunate to track these kinds of investments. And again, you see very, very few development stage companies with three cornerstone investors, the quality of with whom we have with these three companies. Back in November, our team published our feasibility study. Very happy with where it landed, NPV of over $2.5 billion. We're now the world's second largest nickel reserve, the world's second largest nickel resource. You can see the cash flow metrics there of over $500 million of free cash flow once we're fully ramped up, and producing nearly 50,000 tons of nickel during the peak period. Other thing I'm very proud of our team, we went from basically literally sticking a hose in a pail in July of 2022, and within 18 months had come up with an engineered feasibility study level design that allowed us to incorporate what we call our IPT carbonation process, which allows us to use the capacity of our tailings to capture and store carbon. So in addition to being one of the world's largest nickel processing plants, we also would be one of Canada's largest carbon storage facilities. Our team has been moved aggressively on permitting as we have every dimension of this project. We completed the first phase of the environmental assessment process last March, in March of 2023. We're on track to file the environmental impact statement by mid this year. That completes the second phase of the federal process. And then, we'll be in a situation where the government's on a clock to come back with a final answer, yes, no, within 365 days. So we're on track for permits, which will drive a construction decision by the middle of 2025 or less than 17 months from now. As Tim highlighted, not only do we have Crawford, but we have this district scale property. We've successfully tested, 8 targets already. We have 11 targets that are larger than Crawford, and we've got 25 times the footprint of Crawford. And again, remember, Crawford's already the world's second largest nickel reserve and second largest resource, and we've got the geophysical footprint for potentially 25 times that much. So, we really believe that we're in the process of unlocking a district here. In terms of the nickel market, what people are missing is that, we've seen demand grow over 9% since the beginning of this decade. There was no analyst who had 9% nickel demand growth in their forecast. If you roll out 9% through the end of the decade, we go from needing 5 million tons of nickel. We need a whole other additional million tons of nickel, 6 million tons of nickel. In terms of North American demand, right now we've been at around plus or minus 140,000 tons for a very long time. What's coming online with just the battery plants is you're going to see anywhere from 300,000 to 400,000 tons of nickel consumption in North America by the early 2030s. So not only do we need, half a dozen Crawfords, we need half a dozen Crawfords worth of processing plants. And so there's a real opportunity here to unlock a massive amount of value here in North America from the nickel demand that's coming down the pipe. The battery companies we're talking to, the automobile companies that we're talking to, they know this reality. They've built the plants. They have the car forecast. They know how much nickel they need. And that's why they are banging on our door to try and get as much nickel as quickly as possible. And we're the only big scale mine in North America that can come online, by the end of this decade. In terms of carbon footprint, that's obviously driven a big interest in the property in terms of our low carbon footprint, not only at Crawford, but across that portfolio. Carbon is just one dimension of the environmental footprints. Sadly, we've seen 2 smelter explosions and fires in plants in Indonesia that have the first one led to loss of life of 21 people. That's not the kind of labor and safety record that big Western companies want to be associated with. So again, it's just that much more helpful, for those of us who are lucky to have a nickel sulfide project in this part of the world. And then again, just concentration. We all know what OPEC did 50 years ago to oil prices when they had that much share of the market. You are going to see, they're not going to do what OPEC did, but Indonesia's done a great job managing their resource, and you will see equally clever supply management as we move through the remainder of this decade, which should result in nickel prices being higher than they otherwise would, as they try and maximize the revenue that they get from a limited resource. In terms of the project, one thing that has not changed is the tremendous infrastructure that we have in place already, which has allowed us to advance the project quickly, and contributes to an overall robust project economics. We've got, 3 main communities, within an hour's drive of the project site, and more than 60,000 people with that hour's drive. And so we've got the great opportunity to have a new mine that will have a local workforce that can drive home every night, which has a significant number of advantages in terms of building and advancing the project. In terms of the economics, as I highlighted at the beginning, very, very happy with the overall metrics. And again, with the carbon capture and storage credits, it takes the value up that much higher. You can see the scale of the production, both in nickel and cobalt, and as well iron and chrome that will produce through that period. We will be the only chromium miner in North America, and we'll supply about 15% of North Americans' chrome supply. CapEx just under $2 billion, which was in line with what we had been expecting, given the much larger startup than we had in the PEA. And again, very happy with where we landed in terms of cash costs and cash flow, for the mine over the 41-year mine life. In terms of phases in the PEA, we went through two additional expansion phases. In this case, we just start about 50% larger and then twin that a few years out and run out for the rest of the project life at 120,000 tons of ore a day. We're still only using a fraction of the resource, so there's potential in the future to further expand the plant or extend the mine life beyond that. You can see here that the various metrics for the company in terms of where we are in costs, where we stack up versus the industry. First quartile of the cash cost curve, we get a nice benefit from the iron chrome byproduct, as well as the cobalt PGM content and the nickel concentrates. We are in the lowest decile of the carbon curve. This does not include the 1.5 million tons of CO2 we store, or the net 30 tons of net negative CO2 footprint from our carbon storage that it generates. We're the second largest nickel reserve globally, just behind Norilsk and ahead of a number of big laterite projects. We're the third largest nickel sulfide operation if we were fully ramped up today. There's a term I didn't think we would use anymore, but given the current state of geopolitics, we'd be the Western world's largest nickel sulfide operation. That's the kind of scale that we're talking about in terms of the asset that we have here with Crawford. In terms of carbon capture, this is a picture we've used many presentations. All we're doing is taking advantage of the fact that these rocks want to spontaneously absorb CO2, and we developed a process that allows us to do that within the mill before we discharge the tailings. With a very simple, straightforward process, we're able to inject and store 1.5 million tons of CO2 that then get deposited in our tailings. Magnesite, the white mineral that coats this rock on the bottom here, it is about as permanent a storage material as you could get. Magnesite is used to make bricks in metallurgical furnaces, and so again, it robustly locks away any carbon that's there. And again, in addition to being good for the environment, it also allows us to have the process plant become eligible for the carbon capture and storage credit, and we'll be applying for that this year. In terms of overall timeline, the big milestones this year is to have the impact statement filed mid-year. We are working with Scotia, Deutsche Bank, and our debt advisor, Cutfield Freeman, to have the full $2 billion financing package in place before year end, so that when the permits show up sometime during the first half of 2025, we're ready to begin construction and make that construction decision as soon as they come in. We have a 30-month construction period and, expect to be producing first nickel and concentrate, by the end of 2027. So, this is all Crawford, again, taking something from fifth drill hole to halfway through permitting, full feasibility study complete in just over 4 years. What's great is we can take everything we've learned now at Crawford and then start to roll that out as we drill off these resources with the flow through money that we've got. So again, 25 times the footprint. We've got 11 targets that have a bigger footprint than Crawford, and we've successfully tested Sothman, Midlothian, Bannockburn, Texmont, Deloro, Reed, the other original properties around Crawford, Man Northwest, Man Central, and we'll look to be able to target the remaining properties as we roll through the flow-through funding this year. Just to highlight, what makes this happen, why we're so confident with the regional potential we have. These types of deposits, really show up in a magnetic survey. They contain a certain amount of magnetite when they're properly serpentinized. And when they're properly serpentinized, we know that we can recover a decent portion of the nickel that's contained within that. We use the provincial geophysics to target Reed. We drilled 16 holes. All 16 holes hit the target mineralization we were looking for over very large intervals. We've already defined a footprint that's as big as we had almost as big as we had at Crawford. And we expect the overall footprint to end up being almost twice the size of what we've got at Crawford. And as I said, we've got 11 other targets that are bigger. And you can see the list of targets that we've successfully tested so far. Our team, we like Crawford, and it's going to be a great project. But most of us believe that we've got one or more of these regional properties that'll end up being a bigger, better project than Crawford. It's early days, but some of the early drilling that we've seen in some of these deposits, we think there's a lot of potential that's there. So, again, a nickel district. There's only a half a dozen regions around the world that deliver, the bulk of the world's nickel. We think Timmins has the potential to join this list. The first generation of nickel, were the big sulfide deposits, which unfortunately came with a lot of SO2 and acid rain pollution that went alongside with them, and nasty tailings that needed to be cleaned up later on. The second generation of nickel supply has really been the use of laterite ores to produce nickel pig iron and stainless steel. Those were just deposits that were discovered back in the 60s and 70s by Inco and a bunch of the other companies, but were, quote, too low grade for traditional industry to take advantage of. Tsingshan grabbed access to these deposits, and is now one of the world's largest mining and stainless steel companies. We think, our scale, big bulk tonnage, ultramafic deposits, with the nickel production potential we have, with the ability to act as a big carbon storage facility, really will allow, the Timmins Nickel District and these types of deposits to become the next generation of nickel, for the next 100 years. We've seen a massive amount of corporate activity in the space over the last 3 years, with multiple transactions from BHP, Wyloo, and Independence Group. They've effectively acquired all of the sulfide deposits that have been around for more than a couple decades. We think these companies, with very few new discoveries out there, will be turning their focus, to the kind of big bulk tonnage deposits that we've identified in the Timmins region. And then in terms of where we go here, again, we think there's a very strong investment case, focused around fundamentally, the market needs and wants large-scale nickel supply in North America. That's why, we've got Agnico Eagle, Anglo, and Samsung SDI in the story. We've got two experienced mining companies in our name. That should be a great vote of confidence that, these types of bulk tonnage deposits, do work, can work, and can become, very large producers of nickel. We've started the year off with the two investments from the company. We've got an offtake agreement. We'll see another one or two of those come into place before year end. We're working on the Texmont resource and PEA and expect that to come out in the not too distant future. With the capital that we've raised from Agnico, you'll see lots of news flow around the exploration and regional exploration potential. Environmental impact statements on track for mid-year. With the feasibility study complete back in November, we'll look to have the definitive agreements with the local First Nations groups in place before year end, and working with our partners at Scotia and Deutsche Bank and Cupfield Freeman to have our full financing package in place by the end of the year. So we're ready in 2025. When those permits show up, we can hit the go button and be ready to start construction as soon as possible. With that, I'd be glad to answer any questions. Thank you for taking the time to hear the story, and look forward to answering your questions going forward.
Great. Thank you very much, Mark, for the informative presentation. As Mark mentioned, we'll now start the Q&A portion of the webinar. Just a reminder to everyone on the line that you can type your questions into the chat box at any time. We already do have several questions. Maybe I'll start off more at a corporate level. We have a couple of people asking if you would look to graduate up to the TSX main board or look for a U.S. exchange listing.
Yeah, so the first step would be the TSX listing to uplist there. We have looked at it in the past. Now that we've got these partners in place and additional cash on the balance sheet, that's something that we'll look at in the first half of this year. But we've been pretty busy with the Agnico and Samsung negotiations.
Sure. Looking at the offtake agreements, we had several questions here about the offtakes, and you did mention you'd look to have at least one or two more by the end of the year. Can you tell us a little more about the terms and also about the Samsung offtake? Is it just going to be at market prices, or what are the terms of some of the offtake?
Yeah, so in general, the marketing terms with Anglo and what we're looking at with Samsung, would be in line with the kind of numbers that were shown in the feasibility study. Obviously, the specific terms are confidential, but the benefit for these companies to participate in the project at the project level is they effectively get access to the nickel units at the cost that the joint venture produces at them, which gives them an overall blended discount that makes sense for them. So that's kind of the path that we're going down with Samsung, and we'll see what happens with the other groups as we move forward.
Okay, great. And we had a few questions here. A couple of people ask about Anglo. They had the right in the original and their investment to top up to 9.9%. Have they indicated that, obviously with these newer investments, have they indicated that they will top up?
No, I would say they haven't indicated completely, but our initial indications is that they won't. Anglo, if you go back in the last 6 months, has facing some serious cost challenges. So, and they need to focus their capital on some of their existing projects, to get those ones over the line. So yeah, we're not expecting them to exercise their pro rata at this point.
Okay. We did have a couple of people, and you had briefly touched on Texmont, but can you tell us a little more about the plans here for Texmont?
Yeah, so Texmont, we should have resource and then PEA out here before the end of the first quarter. It was a little delayed from year end. It took us till the end of the year to get the feasibility, to the end of November to get the feasibility study over the line. The kind of discussions we have with Samsung and Agnico require a significant technical commitment as well. So there's only so many balls that we can keep in the air at once. And so the Texmont ball just got shoved a little bit into the first part of this year.
Great. And I guess touching on the other projects, obviously you have the flow through money, and you'd mentioned the other projects in the pipeline.
Yeah.
Can you tell us about specific drilling plans here? What would be the first target, or when will you be drilling at multiple targets at the same time, or will it be one after another?
Yeah, no, we'll be drilling at multiple targets at the same time. We'll focus the programs geographically, so we're not having to, it's 100 kilometers south to 100 kilometers northeast and about 80 kilometers west. So it's a pretty big footprint from edge to edge. But, what you're going to see this year is a number of resources generated from some of the drilling that we previously completed. So we may just need a few more infill holes to be able to generate an initial resource on a handful of the targets that we've got. We are going to go, there's still a bunch of the properties that we haven't had our first drilling yet. So we'll obviously be going to those properties to make, what we think will be some new discoveries, and continuing to add to the list of discoveries that we've already got. And then most importantly, with deposits like Reed, with Midlothian, where we've got a very big footprint in terms of the geophysical target, where we've had some great results to date. Reed, all 16 holes, we're very, very good. You'll see us infill those to be able to put out, what we hope will be some pretty chunky, mostly inferred, but those initial resources on some of those very big targets, with the goal of generating a multiple of the total nickel resource that we've got today. With Crawford, we'll be putting together some presentations here, maybe run a separate webinar just to walk through what the overall exploration plans as they get finalized over the next few weeks here.
Okay, great. Looking at the Timmins area, obviously it's an established mining camp. There's various facilities around. We did have some people ask, about processing facilities, and I know the feasibility study obviously does have a standalone mill at Crawford. Is that continuing to be the plan, or is there an option to use some other facilities? And I guess circling up, I'll add to that with Texmont, obviously. I think the plan is to ship ore from Texmont, but please go ahead.
Yeah. So Crawford, the thing with the big bulk tonnage, value per ton is you can't, typically ship those too far before you start chewing up a good chunk of the value. So those will always have large captive mills associated with those deposits. In terms of any higher grade material, we would definitely, and again, we've got high grade at Texmont, we've got high grade at Sothman, we've got high grade at Bannockburn. We're hopeful that we may stumble on some other high grade targets associated with some of the other deposits, and we stake that entire Texmont trend, where we're hopeful to find potentially a few more Texmonts along the trend. Anyone there with the kind of grades that we've seen there, we can transport that ore and toll mill it through. You've got that one mill just to the east of us, just to the east of Texmont. There's obviously the Kidd Creek mill that's got some capacity, and there's a few other mills a little further afield. But if we find the ore and we can make money processing it, we'll definitely be doing that sooner than later.
Great. We had a couple of questions here related to government issues. Yes. Have you received positive feedback from the provincial and/or federal government? And we had one question about time frame to receive any government monies. Are there, what kind of funding might there be from the government?
Yeah. So the only quote problem that we've had in terms of advancing the project very quickly is to some extent we've been out in front of a bunch of the government programs. So, money for feasibility study came out from the U.S. government. We were already mostly the way through the feasibility study, that kind of thing. We're now at the point where there are a bunch of government programs that we're able to take advantage of. We've put applications in through the end of the year. And so, we should see towards the end of this calendar quarter and into the second calendar quarter of 2024, some of that money come in, and we're hopeful that we're going to get some pretty chunky checks at this point. We've been able to advance this project with only about $500,000 of government funding that came through from the Ontario government. So, we're due some cash, and hopefully we'll get that through sooner than later.
Great. And actually, circling back on the regional processing, maybe this is just kind of an interesting question, but I guess Electra is building a cobalt nickel refinery, planning to near Cobalt. Yep. Is that something that would be potentially part of the processing?
I think for now we would look to process our nickel concentrate, in conjunction with some of our offtake partners. The cobalt for us is a pretty small portion of the overall value. It's really driven by the nickel, and so for now, we would look to just focus on the nickel processing. Who knows? And again, always, if we're able to collaborate in a way that adds value for both companies, always very open to doing that. But for right now, I think we'd see some sort of integrated processing plant with one of our partners, or just a more nickel focused processing plant.
Okay, great. And circling back here on other metals, we did have a question about whether the flow-through money for drilling will be focused on nickel only, or obviously you've had some interesting PGM results here and there as well.
Yeah, so the flow-through money has to be spent on critical minerals, and fortunately both PGMs and nickel and cobalt are all eligible. And so, one place where we can use some of those dollars for Crawford is We didn't, we had our PGM reef that we hit pretty consistently at the boundary between the peridotite and proxenite on the north side of the main and east zone. So that a big chunk of those tons are actually in our mine, and we're mining them. But in the feasibility study, we're treating them as waste with no value at this point. So, we now have the money to be able to do enough tight space drilling to be able to, put a indicated resource together for that PGM reef that should allow them, to be included in a mine plan in the future. So you will see some PGM focused drilling on those two targets.
Great. And obviously, there's quite a bit of talk on the battery metal side here, but nickel still is mostly used for stainless steel. Have you been in talks with stainless steel companies as well?
Yeah, so we're in touch with two of the largest European, North American stainless companies. We're in touch with a handful of the larger chrome, ferrochrome producers. Again, on this half of the planet. They're attracted by the fact, to have a nickel chrome iron feed in North America that could be used to produce stainless steel and other alloy steel products. The potential to integrate some chrome ore transformation and use our tailings to store any carbon as that chrome ore is being produced is also of attraction to these groups. So it's nice to have. We've got significant interest in the car and the battery makers. We also have, significant interest from the stainless steel, alloy steel producers as well.
Okay, great. Looking at timing here for financing and planning for the project, we had a couple of questions about, what would you do in terms of a long lead time? Both we have, are you looking to start hiring or getting people, tradespeople in position? Because obviously you can never get enough skilled tradespeople.
Yeah.
And also long lead times with things such as a mill. There's a question that says Osisko Mining ordered their mill before they even had permits.
Yes. Yeah. So in our case, on the skill side, we're starting to work with Northern College. We won't be hiring tradespeople for a few years yet, but we want to start to get the programs and start recruiting the people, to have them, in place so they're skilled and ready to go. By the time we get going. On the long lead side, we're very cognizant of that. And we basically have a detailed plan from today through to, first production to really understand the sort of the interplay around some of these long lead items. We will commence the detail engineering in a big way starting in the second quarter calendar wise, and that'll ramp up as the year goes on. To be able to make sure we've got enough design engineering in place across the various items. And then, by the, end of this year, early next year, depending on timing of receipt of permits and so on and so forth, we'll need to start to make a look at long lead decisions. But, at that point, we hope to have our project partners in place and any financing they bring to the table, should allow us to keep to make whatever long lead orders are required and allow the project to stay on track for our, end of 2027 first production.
Great. Circling back on the offtake, question: why is next offtake by year end? Is this kind of to get more value, or are customers taking their time?
Oh no, it could happen far sooner than that. We're just putting it out there because these things take longer than expected. It could happen in the first half of this year. So,
okay, great. There was you recently had a corporate announcement. You had announced some additional purchase and sale agreements of properties from vendors. Can you tell us a little more about those properties, how they fit into your portfolio?
Yeah. We're basically looking just to consolidate our land positions around our targets. Particularly in a camp like Timmins, that's pretty well established. You just can't stake everything you want or need on day one. You have to pick away at it. So we just continuing to pick away and do deals to be able to link our various properties together and make sure that, if we do find a deposit that we can mine, that we've got the room to store the waste, store the tailings, and have some infrastructure on the site to support the operation.
Great. Now we had a couple of questions about cost curves in comparison to laterites. Obviously, the project is projected to be in the lowest quartile of the cost curve. How does the AISC compare to that of these laterite deposits in Indonesia?
Yeah, so if you looked at the cost curve, you'd see there's, in the first quartile, it sort of ramps up and then sort of is very flat through the second and third quartile, and then, rises again in the fourth quarter. The first quartile, if you look at, is basically dominated by sulfide operations that have significant byproduct credits in terms of PGMs, copper, cobalt, or in our case, magnetite and chrome as well. And so, it's having those meaningful byproducts that helps us get into that lowest quartile. In terms of, that sort of very flat middle piece, that's a lot of the Asian Chinese NPI operations, where there's, it's effectively an average ore grade, and most things in China are around an average energy cost. So, with those two things, that's about 80 to 90% of the cost of most laterite operations. And so that's why you've got that long, very flat part in the cost curve. And then at the tail, those are either, sulfide operations that are older and don't really have any byproduct credits associated with them, or some, legacy nickel pig iron ferronickel operations that are now in higher energy cost operations like Japan or elsewhere, and sort of dominate that tail part of the curve.
And talk about the nickel price and costs and things. Obviously, we've even though we're bullish on the price of nickel, in the short term here, it's with some high production out of Indonesia and so on. The nickel price has weakened a bit, and a few companies have, I guess in Australia especially, have announced shutting down operations, at least temporarily. Does that play into your decision making here in terms of either Texmont or Crawford and the timing and pushing forward?
Yeah, I mean, for us, our view on the nickel market is, we will start to see a restocking rally both in the EV market and then followed by stainless starting after Chinese New Year. So by the end of February, that I think will surprise people, and I think takes his nickel prices back up towards $20,000 a ton by year end. Whenever you get to a bottom and turning point in the nickel market, the kind of news we've seen out of Australia, First Quantum closing Ravensthorpe, BHP thinking about writing down some of their nickel investments, those are the kind of capitulation events that you see at a turning point. And so, from my perspective, I was already calling a bottom to happen post Chinese New Year. This just helps reinforce that, that bottom is likely getting set in. In terms of sort of impact on our decision-making process, we're going to have a 40-year deposit minimum that starts in 4 years from now. So we're really focused on the longer term as opposed to what's happening with the price today. And so, the key thing for us is, continue to advance the project, raise capital in a way that makes sense, doesn't blow out the share structure, to be able to continue to advance it and hit the timelines that we're kind of talking about. And again, I think from this, from here, the downside in the nickel price is relatively limited.
Okay, great. We had a couple of questions here that are interesting about Australian green premium nickel price. What's your opinion on that? And do would the Canadian government be considering something similar to that?
So so a couple of things. One, one of the challenges Australia has, specifically, and again, would not use Australia to draw analogies to sulfide deposits across the world. A number of those operations are in some cases 30, 40, 50 years old. So, you're getting towards the end of their mine life, and by definition, those tend to make those mines higher cost. They're effectively captive to the BHP smelter. The next nearest smelter is a few thousand kilometers away. And so, they tend to produce, concentrates in the 10 to 14% range. So makes it expensive to ship those very far. So, BHP does a good job extracting rent from running the smelter in that area. So, those things contribute to those mines struggling and struggling in the current environment. In terms of the green premium, I think the other challenge that Australia has is, as being part of Australasia and your nearest customers being mostly Chinese companies, they will struggle with the fact that area is net long nickel. And so, earning a premium in a region that's net long nickel is never going to be easy to do. Whereas those of us who are in North America, where we're seeing premiums for nickel products much higher here than they are in Asia or in Europe. And we see that across a range of materials. So, you will see a Western sort of, I wouldn't even just call it a green premium. It'll be, it's a combination of local supply, low carbon footprint, green approach to things, good labor relations, that'll ultimately sort of have a premium. And again, I think there is already one, effectively for a lot of products in North America. And I think that's only going to, grow further as we continue to move forward in this energy transition.
Okay, great. And we have a question here, actually quite interesting. Obviously, you've had a focus here on the IPT carbonation process and using the tailings for carbon capture. Mm-hmm. And we have one interesting question here. How would you plan to deliver CO2 to the project? Would that be by rail or truck or pipeline? How do you envision that?
So initially would be by rail and truck, and we've had discussions with some very large potential partners on that front. Who have thought through the logistics of how to get CO2 to a storage facility. So that's good. Longer term, if the volumes are there and the pricing's there, then you could see pipelines built. We're in close proximity to the main Trans-Canada gas pipeline network that follows Highway 11 completely across the country. So that puts us in a good position to be able to take advantage of that our partners to take advantage of that infrastructure. And then the other sort of big push and is a much more broader value add approach is, really looking at Northeast Ontario as a zero carbon industrial cluster. You've got access to lots of hydroelectricity further north that hasn't been developed because there haven't been a use for it nearby. We have the natural gas pipeline. So anything you'd want to use to make hydrogen with, we can take that remaining carbon atom out of the methane and use that to store in our tailings and carbon footprint. And then, you've got communities that are quite comfortable with processing, and that's not always the case in a lot of regions globally. So the combinations of, low carbon power, infrastructure, gas pipeline, and lots of rocks that can store CO2. We really think has a chance, a once in a generation chance to really reposition the Northeast Ontario economy.
Great. We have an interesting question here. What of the other notable deposits? Obviously, we had mentioned FPX. And they have a large deposit as well out in BC. Can you speak to the pros and cons between Crawford and other deposits, maybe specifically FPX?
I'm not going to go into comparing other. The key thing here is we need 200,000 to 300,000 tons more nickel by the early 2030s. So we need all of the above to come to market. I think there's some differences. They've got some pluses, we've got some pluses, but I will leave that you guys to do your own work and do comparisons. But in the end, both of us could bring in all our production in, expand it again, and we still wouldn't meet the nickel demand that's coming down the pipe. So,
okay, great. And we did have a question, kind of circling back on project financing. There was a question about the, potentially looking at the debt portion. But obviously you have offtakes, different things on the go here. Yeah. But, do you have a feel for what the debt market is like currently? And, with a large CapEx project, would a junior such as Canada Nickel be able to secure that large amount of debt?
Yeah. So in the current environment for critical minerals, it's actually going to be, pretty straightforward. When you have a project with a CapEx of just under $2 billion, there's obviously a bunch of other costs that get lumped in there. So, we're going to be looking for, $1.2 to $1.4 billion of debt and $800 to $900 million of equity to be able to fund the project. In terms of the debt, the big Canadian agencies that provide this kind of debt, whether it's Export Development Canada, Canada Infrastructure Bank, and their counterparts like Exim Bank in the States, and there's similar ones in Japan and Korea as well. We're pretty confident that we'll be able to get that quantum of debt at a reasonable price. They've all got the memo that they need to be seen to be supporting critical minerals projects, and so we tick the boxes in a lot of ways for there. So that's the debt portion of it, and we're working with Cutfield Freeman, who's one of the leading advisors in the space, and have got great support from them so far. On the equity side, there's a huge range of government funding programs, including the refundable tax credits. In other industries, there's been a bridge financing capacity emerge that allows you to, effectively pull some of those tax credits forward and use them as upfront capital. And so, we're pretty confident of that 800 to 900. We'll get at least $400 to $600 million between the feds, the province, and the U.S. Department of Defense. We'll look to sell 10 to 20%, most likely 20% of the project to one of the big Japanese trading houses. There are several that are interested. They tend to buy in at a 0.8 times project NAV. That would put close to $400 million US in our pocket. And then, we should be able to extract another 100 to $200 million of offtake related financing that would be counted as equity. So it's relatively easy. And again, this is the thing that I think investors are just totally missing, is that this is a once in a generation opportunity where the government is giving you free capital or very low cost capital, and so gives you effectively free leverage on any equity that you're able to deliver to the table. And so, for those of us who are lucky that have a project and hopefully multiple projects that'll be able to take advantage of that window, again, we'll be building mines that are going to be lasting for 40, 60, 80, 100 years. And we get to do it in this 5-year window, build them when we've got this 5-year window to be able to attract lots of low cost government money.
Great. And we did have a question come in right there, but just to reiterate, if governments do put in money, what are they looking to get for that funding?
So again, some of the funding is just the refundable tax credits is just cash right back. There are no strings attached to that. Some of the other funding programs, it's basically, if you end up making money, then it becomes repayable. But, if you don't, it's effectively non-recourse to the company. So, there's those kinds of structures. There's other kinds of, financing guarantees, other sort of indirect financial support that they can provide, that will ultimately allow us to raise more money. So, this year is really going to be a big push to be able to maximize the amount of government support that we're going to get, and I think we'll be very successful on that front.
Okay, great. We'd have a question about First Nations. Can you tell us more about the agreements you have in place, kind of definitive agreements you're looking to put in place, and how many different First Nations groups are you working with them?
Yeah, so we've got 3 core communities: TTN, Matachewan, and Matagami, and then there are several other communities who we also have to consult with at different levels. We're a good chunk of the way, 2/3, 3/4 of the way through impact benefit agreements with our core communities. We basically had to wait for the feasibility study to be finished to be able to finish off the remaining chapters. But now that that's done, again, we're looking to have those done by year end, and hopefully, a little bit earlier than year end.
We inevitably have questions about the share price, even if it's a good market. A couple of people asking about, obviously, the shares performed very well here in January with the positive news with the strategic investments, but it's pulled back off its peak. Is there any thought about insiders stepping in and buying at these bargain prices?
Oh, no. I mean, we've been I've been particularly pretty consistent buyers at much higher prices than where we are now. I'm not sure how much what's the word I'm looking for? Firepower. A number of us have, but if you go back, I think there's been 1 or 2 sales where people needed, there were some specific situations where they needed to raise some cash. We usually place those shares with another, insider or a private transaction, so they didn't hit the market. So I think you'd be challenged to find too many companies that have the insider track record of buying that this company's got.
Great. And kind of circling back, it was the first question we asked, but someone may have missed it. When would you look at a TSX listing or a US listing?
Yeah, I think TSX is something we're going to look hard at once we sort of get through these closing these various transactions, and it's relatively straightforward to be able to do. You just need a certain amount of runway to be able to get it over the line. U.S. listing, we always go back and forth on, just with it's a significant increase in administrative burden. It's a significant increase in D&O insurance, and so it's something you can't do lightly. So we'll see how the year progresses. We'll see how the markets behave in the U.S. versus here, and then we'll make a call as to whether we do that. We something we sort of keep on top of an ongoing basis to be ready to go if we want to go. We just haven't decided to go at this point yet.
Great. And we did have a couple of questions about arsenic. And maybe you could touch on, is there arsenic in
Zero.
Crawford, or are there other deleterious elements? Is that a concern?
No, there's near zero. So one of the nice things with these ultramafics, the ones we have here, there's certain deposits in Australia that have been subsequently altered and have significant amounts of arsenic. In our case, it's basically near zero. And the minerals we have, there's very little in the way of other deleterious elements. They're hosted in serpentine rock that has a certain amount of MgO in it, but other than that, there's no other metallic minerals that would be considered deleterious. So it's a very, very clean concentrate otherwise.
Great. And a couple of questions here. Near term, when would you expect? Do you have drills currently operating yet, or when would you expect to start drilling? And when would you expect to have next drilling results?
The drills are already turning. We've got 3 drills going. We'll be ramping up with another 1 or 2 over the next 6 months as conditions and permits allow us to. So, it'll take a while to sort of, get the flow going into the assay labs, and we still have some results from last year that we haven't put out. So you're going to start to see a steady stream of results as we get into February, and hopefully, with exploration activity a little bit subdued, hopefully, we get some decent turnaround times, and we'll have a steady flow of results back out to the market. It's very, very exciting to be drilling again, and again unlocking what we think is going to be the world's biggest nickel sulfide district.
Great. Maybe one question that's a little hard to answer, but obviously we've talked about government support for the projects. Maybe elections coming up in Canada and the US. Any thoughts about, would you see a shift based on election results, or are the governments really, these programs are really already in place? Yeah.
So the nice thing in the US is there's very few issues that have bipartisan support, and getting China out of the supply chain is one of the few things that both parties actually agree on. So, we don't expect, I was initially reached out to during the Trump administration by the U.S. consulate here in terms of whatever support was required, and had initial meetings with government officials then, and it continued on under the current administration. Not expecting any change on that front. It was nice to see the conservative leader in Sudbury talking about support for mining and streamlining and permitting and so forth. Again, I don't think politically, we'll see. I mean, there may be some tinkering to, different parts of the program, but, the fundamental support for the mine to EV strategy, I think, it makes a lot of sense. Southern Ontario, you either need to win Southern Ontario or Quebec to form a government in Canada. And so Southern Ontario has been the prime beneficiary of, a lot of the funding from the federal government in this area. And so I don't think the conservative leader is going to do anything to disrupt his standing in Southern Ontario. So,
great. We did have one follow-up question here on the drilling. Can you tell us where the 3 drill rigs are focusing currently?
Stay tuned. We'll have a comprehensive update in the next few weeks. So
great. And maybe one final question, projecting further ahead and think about Crawford, if everything goes as planned, when would you expect to have production?
Yeah, we're targeting, a construction decision on permits in mid-2025, and then, the first concentrate out of the mill by the end of 2027. So
great. Well, great. I think that touches on all the questions. Lots of good questions here today for Mark. And I'd like to thank Mark Selby for presenting, and thank you everyone on the line for tuning in. Just a reminder that Red Cloud Securities will be back tomorrow afternoon when our webinar series continues with Corex Copper presenting Tuesday, January 30th at 2 p.m. Eastern Time. Have a great rest of your day.
Thanks, everybody.